G'day expats and welcome to another episode of Expat Chat. We've been away for a while, so we're glad to be back, episode 85 today, and welcome back to my colleague and co-host and mate, James Ridley, who's the Managing Director for the Asia Pacific region. Welcome back, mate.
Thank you, Brent. That's a terrific introduction for those who are dialing in today or tuning into the YouTube channel. As always, joined with Brett Evans, who is the Managing Director for the Europe, Middle East and Africa's region. Brett, how's the sandpit treating now? I mean, before I left back in April, I think it was about an average of 35 degrees, sort of 40 degrees.
They announced we had the coolest month of April for 25 years. It was fantastic. It was absolute bliss. Now, different story. Yeah, I was driving on the other day, going down to 311, who, folks in Dubai would know that road, and looking on the dash, and there was 48 degrees. So,
geez.
We're getting up there. We're getting up there. So, summer's here with a vengeance. We've got a cyclone forming in the Arabian Sea, sort of between, Oman and India out there. I'm not sure where that's going to go. And, mate, summer's rapidly approaching. Everyone can't wait to get out of Dodge.
I bet.
People are tired, parents are tired, everyone deserves a bloody break.
Yeah, that's right. The holidays are coming, aren't they? Is it a week or two out now, or when's the school holidays wrap up?
We've got Eid happening the end of June. They haven't, obviously, as you know, they haven't determined when that is. It depends on the moons and cycles and that sort of stuff. And then I think schools break up at the 7th of July. So
beautiful.
Yeah, not too far away. But when you're talking to your kids and there's blank stares back that the tank is empty, they are toast.
Yeah. And I mean, the heat doesn't help as well. It's just when you feel like you've got no energy. And
it takes a while to get used to the heat because it kicks on pretty quickly. You go from having nice civil days of low to mid 30s, and then next thing you know, it's 45 and 47s, and you're alive. So
I can't really whinge, to be honest. I'm on the lovely Gold Coast right now. If I look to the right, I can see the ocean, and it's probably an average of 22 degrees. Winter's not crazy yet, and I think they're thinking that it might be an El Nino winter, so pretty dry. So pretty dry. And I don't think it'll be too cold either. So, and I mean, we don't really have winter on the Gold Coast, so it's a terrific place to visit, guys. Visit the Gold Coast.
That is, the Gold Coast winter is like a Dubai winter. I think there's a reason why we have an office on the Gold Coast and an office in Dubai. That the winter's amazing. You got sort of low to mid-teens at night, low 20s, and during the day, it's just a beautiful time to be there.
That's it, mate. Now, listen, we always as our listeners know, we digress. I think we're in the wrong field. I reckon we should be weathermen, to be honest.
Well, Aussies at the end of the day. Aussies, love to talk about the weather and everything. So
that's right. Now, we're doing a special episode today, and it's a bit of a Q&A episode. And given that AI is all the rage at the moment, it's getting a lot of media, I thought I'd ask ChatGPT what are the top 5 or 15 questions that Australian expats have with regards to managing their finances. And we're going to answer 5 today because they are very specific, and ChatGPT has done a pretty good job, and we thought what a special episode, terrific episode just to jump into. So we'll address these 5 questions and run through them because they're actually very similar to all of the queries and concerns that obviously we get from our clients and any Australian expat that we're talking to. So why don't we jump into it? I'm going to throw the ball back over to you, Brett, for a bit of a disclaimer.
Mate, all the information that we are about to espouse should be treated as information and educational purposes only. Do not treat this information as personal advice. First of all, speak to a professional. Second of all, speak to a professional who's match fit. So I will also apologise to the audience as well. My sound won't be as great as James's, and mine is normally. I'm actually working from home today because we had issues with our water tank. So I might sound a bit echoey, so I'll try and talk nice and loudly and succinctly so everyone can hear properly.
Sounds good, mate. Now let's jump into it. So first question that GPT or ChatGPT has given us is, should I continue to file a tax return in Australia while living abroad? Oh, what a timely question, given that the end of the financial year is right around the corner. And a quick shout out, I should say, to our webinar. We've got a webinar coming up with Ben Turner, the manager for Atlas Tax. When's that happening, Brett?
Next Wednesday, the 14th, and 12:30 p.m. Dubai time, 4:30 p.m. Singapore time, 6:30 p.m. Sydney time, 10:30 p.m. Was it 9:30 p.m.? Sorry, 9:30 a.m. Paris and 8:30 London, I think. So anyway,
Great.
we'll put the details in the link below, so you can.
Overall, pretty friendly times.
Yeah.
I mean, the recording will be made available, but God, the real good stuff comes out in Q&A at the end. I think we can all agree there that everyone's got the same problems, whether you're in France versus whether you're in Dubai or whether you're in London or whether you're in Singapore. And it's really nice to hear other experts asking the questions that are on your mind as well. So just a heads up that that's coming through next week. The question itself, should I continue to file tax returns in Australia while living abroad? What a great question. I'm going to say it depends, but most of the time, usually you will have to file some sort of non-resident Australian tax return, assuming you have declared yourself as a non-resident. And the reason will be for a few things. You might have some assets back in Australia which are producing income. And whether that's a property, so rental income, you might have a share portfolio and you haven't told the platform or the share register that you're a non-resident, so they're not applying any withholding tax, which means you're going to get caught out at the end of the financial year. So that's very important. HEX, you might have a HEX debt. Try to escape it by heading to Dubai, where bread is. No, that doesn't happen. But
it happens. Kind of every day.
Yeah, can't escape HEX. I can't escape HEX for a few years now. And as part of that tax return, you're also doing a HEX lodgement, as they want to know what your worldwide taxable income is, and they calculate a percentage off that of what you have to repay. So it really depends on whether you need to lodge a tax return based on individual circumstances, but don't just assume you don't have to if you've got no income back in Australia, because there's usually a non-resident lodgement that you still have to do there. It might be a return not necessary, but that is still a form of a return, almost an information return, to be honest. I'll kick it over to you, Brett, if I've missed anything there.
Mate, you've smashed it out of the park. It's the non-resident lodgement. It's a 30-second thing you can do on MyGov, so you can do it on the commute on the way to work. It's not an onerous thing. It's one of those situations where there's good practice and then there's reality. I think what we find is most people don't even bother with anything. If they've got no income at all in Australia to report, they just sort of assume that they don't do it, and then they might go back to Australia after 5 or 10 years. At that point, they realise there's all these returns that need to be lodged, and then they'll go in and just tick those boxes and say, return not required, and just bang them out. If you do that on an annual basis, what you've got to understand is the ATO is not a mind reader. So yes, you would have done a return that said, hey, I'm becoming a non-resident at this date, see you later. The ATO doesn't know whether you've come back or not. They don't know what's going on. So if you just want to stay in their good graces and stuff, do those lodgements just to say, hey, I'm still overseas, got nothing to report, check in next year.
That's right. I think the most common one I come across as well is an Aussie's been overseas for 5, 6, 7 years, and they forgot to actually lodge that tax return to declare themselves as a non-resident.
True.
And then they're struggling to sort of work out, oh shit, what were my tax deductions back then? What was I claiming?
Yeah.
You can usually use the previous return as a guide, but you also need the evidence, and you're not going to have the evidence if you're 7 years later. You're not going to have those receipts or anything like that. So that's always where it's sort of falling short. And also just declaring yourself a non-resident, which is really important depending on the different assets that you have, especially around rental properties and those sort of things, deemed disposal. Won't go into it all, as we usually do. But, mate, that's probably a good wrap-up of that first question. Thanks, ChatGPT. Another one. How can I minimise my tax obligations as an Australian expat? That's an interesting one.
Yeah, look, I think they're referring to obviously deductions, and so then we step across to two forms of income, rental income and share income. So rental income, the two ones that come off the top of my mind would be, depreciation. A lot of folks don't do a depreciation allowance. And the second one would be contributions to super. Actually, and there'll be a third. And I met two people yesterday who are doing this, and if I could reach down the screen and slap them in the face, I would have. Stop paying down your debt too quickly. I know it feels good. I know it gives you the warm and fuzzies. You're just killing your largest tax deduction, which is your interest cost. Certainly have cash on the side so you have the ability to pay off debt. And remember, money gives you control, and control is what gives people happiness. So you can choose to pay off your debt any time you like, but don't do it as a non-res, because by doing it as a non-res, you just killed your biggest tax deduction.
That's it. I mean, a lot of that is obviously aligned with the rental property, and we've got to remember that accruing some income losses whilst you're a non-resident, whilst you're away, it's a great benefit for when you come back. You're accumulating. Accountants love to say tax credits. It's not a bloody tax
income
credit.
losses.
It's not a bloody tax credit. A credit assumes it's a dollar for dollar credit with tax, and you'll get that refund back. Not the case. It's a loss, but that income loss will get to offset, say, maybe your Australian wage income when you come back. And that's great because that means you've got a nice, juicy tax refund waiting for you. And that's essentially how it can be treated. But, I mean, that's a really good way that you've summarised that question there. How can I minimise my tax obligations as an Australian expat? One thing you touched on was, shares. So we know with shares, depending on the type of shares that you're investing in back in Australia, one, they're non-taxable Australian property. And that is only the case if you've commenced that portfolio whilst you've been overseas as a non-resident, or you opted into what's called deemed disposal. So that's part one. Part two, depending on where you're investing, if it's the Australian share market, you're getting fully franked dividends. Well, we don't have any withholding tax applied on that because you've got the franking credit there. If it's foreign sourced income, or it's made up of a bit of a blender of different types of income, if you're using, say, a managed fund, there usually will be some withholding tax that will apply there, and that's something that will have to still get registered in your tax return. If you're someone that's investing in things which don't pay franked dividends, but unfranked dividends, and you haven't told the platform or the registry what you're doing and that you're overseas, you're non-resident, then you will have a tax payable at the end of the year because no withholding tax has been applied. So there's a lot there that can be done just to make your tax affairs a bit simpler, and help minimise those obligations at the end of the year. Don't stick your head in the sand and don't lodge. You need to be lodging every year. Don't just stick your head in the sand and not lodge for a couple of years and then try and be a bit of a clean-up crew. It puts too much stress on yourself.
One last thing I thought as well too that would assist people in minimising their tax obligations. If you're selling a property, investigate using the catch-up concessional allowance of contributing into super. Very effective tool, a great way to get you out of those top bands when it comes to the non-resident marginal tax rate. Contributing to the super, as long as you're willing to park that money aside until retirement, one of the best tools ever.
Absolutely. I mean, I like to refer to it as a form of wealth transference. You're transferring that wealth for your retirement later in life. Anyway, moving on. Next question. What are the tax implications of receiving income from both Australia and my current country of residence? So what are the tax implications of receiving income from both Australia and my current country of residence? It's a bit of a broad stroke question, isn't it?
I think there'll be two forms of answers to this. The first is if you are residing in a country that A, has tax, B, has a DTA, so, and C, if they don't, then you got issues. So obviously, if you reside in a country that has a personal tax, unlike Dubai, like say London or Singapore or US, you will earn income in Australia. The taxing right is the first country that you've earned that money in, and if there's any extra to be paid, you'll pay that in your country you're residing. If you reside in a country like UAE, where I am, then what happens in Australia, UAE doesn't care about. The ATO just taxes that side as well. And last of all, if it's a country where, there isn't a DTA between the two, then that's when it can get expensive because you might be under the scenario of double taxing. So
that's right.
Say like Greece, for example, in the process of getting a DTA, not there yet. And what will happen is you have to declare your Australian income to the Greek authorities, and the ATO will take their first bite if there is tax to be paid. The Greek authorities might actually tax you again. So that's the other side.
That's right. Too. Yeah, absolutely. And I mean, when you're going to another country, it's always important to do your research. Unfortunately, if your company provides you with the benefit of being looked after by the Big Four, there's Big Four. One of them's in hot water at the moment.
Dirty word, PwC,
but usually you get a bit of a memo. The memo's not great. So make sure you do your research, whether there's a DTA, how certain income sources might be taxed now that you're going to be a resident in that country, a tax resident, how, different income streams. A lot of Australians love to retire overseas, and that's great. But you might retire in a country where they want to tax you on your Australian superannuation pension. That sucks because in Australia, that pension's tax-free. So do your research, work out whether it's the right fit, and then apply, the cost of living, obviously work backwards, reverse engineer whether it's going to make sense. That's a good wrap up of that question. Number 4, how can I transfer money between Australia and my current country of residence with minimal fees? Good question.
We've covered this before, FX broking, long and short of it. And, it's one of those situations where people in the past have relied upon the banks. Banks make a killing out of FX exchange rates, 4 to 5% margins. Wish I was in that business. Not from an ethical point of view, but certainly from a money point of view. But that's why we've got the likes of Wise, Transfer, Currency Fair, OFX, all those providers. Without a shadow of a doubt, all regulated firms. Some do better jobs than others, especially from a client service point of view. We like OFX because it's Aussies, you're talking to human beings. The other ones, you'd be talking to chatbots and stuff, so there's a bit of friction there if your money does go askew. To us, it's always using a currency broker. What do you think, James?
Yeah, I agree. Doing your research, with my recent holiday when I was overseas, I met into was doing a cooking class. We're in Italy doing a cooking class. My partner is Italian. She loves cooking. So we're doing a cooking class and there's a bunch of other Aussies there. And they sort of asked us, how are you guys going with your currency conversions? And are you using a credit card? Are you using a travel card? And I said we're using a travel card, and I've been loading money onto that since last year around probably April. So I've been dollar cost averaging, ladies and gentlemen. That's what we like about dollar cost averaging, breaking up that FX rate. And I'm glad I did. And I said, what have you guys been doing? They're like, we've just been loading money on as we go onto a Commonwealth Bank travel money card. I was like, oh shit, your fees will be. Your fees will be racking up. And I said, doesn't it cost $15 every time you load money onto it? They're like, yeah, it does. I was like, what's the exchange rate like? They're like, it's not great, but we just didn't know of any other options. I'm like, oh my God, poor things. Yeah. So they don't offer a good rate at all, the exchange rate. I think when I was looking at it on CVA, on the travel money card, I think the current exchange rate for the Australian dollar is about 61, 62 cents euro. I think they were getting like 54. So it's pretty disgusting, but that's just a really short example. Do your research, plan ahead, dollar cost average, those sort of things. It does pay to not go bank to bank, but use a currency intermediary, especially for the long term when you are living overseas. That's a good one. Last question we'll address today. So can I still contribute to an Australian superannuation fund while living overseas? This still does the rounds in a lot of Facebook groups. It's baffling that. Yeah, and it's surprising that it is still a question. Brett, I'll let you answer it.
Well, according to the three-piece shiny super brigade over here that mask as advisors, but pretty much selling insurance products, the answer is no. The unequivocal, legislative, rock-solid roll gold answer is yes, except if it's a self-managed super fund. So the SIS Act, which is the governing law around super, states that there's no difference between resident and non-resident. It's the same. Where it gets different is obviously self-managed super funds. We won't go down that rabbit hole. We've done it 1,000 times. But generally speaking, for most folks on the call, they've got a standard retail or NDC super fund. You can transfer money as long as you're within the limits. We are finding super funds just in the last couple of months are changing some stuff in the background. So just be careful with your particular super fund when it comes to receiving cash. We've had a couple of issues, but generally speaking, fill your boots. It's funny how we find super contributions are not so much age-driven, but just personality-driven. We've got clients in their 30s who are contributing to super, we've got clients in their 50s who aren't. So it really comes back to your requirements for liquidity. Obviously, super funds mafia, 1 cent never out. So to me, if it suits you, if you love that 4 cent of savings, if you think you can't get the money out on a Friday night when you're out in the bar, then it works.
Yeah, that's right. Super, guys, it is the longest usual investment we'll have in our lifetimes, and it does require some sort of attention. So it is worthwhile contributing to it. It's very tax efficient. It's a very tax efficient investment as well. It's very true. A lot of my clients that are older, it's usually the last 10 years that we're now trying to squash as much as we can into super, transfer any wealth that they've been saving and accruing outside into super and trying to hit the ground running when we reach that retirement age of, say, 60. A hard fact with a lot of those clients is they didn't know they could contribute to super whilst they were overseas. They thought it was something that tethered them to Australia, with it being some sort of tax residency issue because an accountant from 15 years ago might have said that in a conversation to them, which is not true at all.
I think I'll also say too, and I'll include a link below to the article, when it comes to super contributions, it's important you use the right one. Do not do a concessional contribution unless you want to claim a tax deduction. At the end of the day, it really comes back to making sure it's categorised correctly. If it's categorised correctly, then hunky-dory, you're all good. But you might be paying 15% tax unnecessarily if your contribution is the incorrect category.
That's right, absolutely. I've had conversations where some people have said that they've been very savvy by making those contributions. Like, that's great. Paid tax for no reason.
The ATO, thank you.
Yeah, exactly. You made your donation. And it's not something you can retrospectively go and undo after the following financial year's gone. So not something that can really be unwound. Brett, I think that's probably a really good spot to wind it up today. We've got some more Q&A coming out. In the meantime, guys, thanks for tuning in, and look out for in the show notes for that end of financial year webinar that we are doing next week with Ben. Some great tax tips in there, things to know. Don't stick your head in the sand and forget about your tax return. If you're an Australian citizen, it's very likely you still need to report something and lodge something.
Exactly, guys. And thanks very much. And we'll bring another ChatGPT edition to you guys next week.
Sounds good. Thanks, mate.
Thanks, guys. Take care.